After a recovery in the spot gold prices yesterday, gold prices have declined today on back of disappointing economic data out of China. A stronger dollar and continued weakness in the investor sentiment towards bullion metals also weighed on the yellow metal. Increased physical purchases helped Indian gold prices rise by almost 0.5% in the day trade, but ended the day slightly lower. On your screens, nearly 0.2% of decline coming in for the gold prices, and this is even after the rupee has seen depreciation in the intraday market today. The crude prices also declined on back of disappointing economic data from China. Prices declined as its speculators trimmed positions. Trading sentiment turned weak after crude oil eased in Asian trade as data showing weak Chinese manufacturing activity fueled concerns over demand in the world's second largest economy. Data from Germany also darkened the outlook for fuel demand, and the result is on your screens there. 0.5% to 1% of a decline coming in for the NYMEX and the Brent crude prices. Let's get in then. Vijay Bambani, who's author and CEO, BSPL.com. Also joining us is Shrikant Jha, who's MD, PJ Commodity Ventures, and he joins us live as well. Shrikant, hi, let's start with you first. And what's your sense coming in for the precious metal prices? After last week of gains, we have started yesterday and today yet on a weaker note when it comes to gold and silver prices.
There was some news in the paper the other days where they had actually closed the markets for a couple of days in the physical market, trying to dry up the supply side and bring in some form of demand. I think people may get fooled into thinking that prices may go up, but actually it's in a strong bear run. So I think that on declines, I don't think you can really buy at this juncture. In fact, you can just short it every time the prices go up. If you're looking at silver, I was looking at silver at about 42,000 for a while. I didn't think it'll come up so fast. If you look at gold, you may get some form of a retracement, but on the other hand, if it slips now again below the 25,000 level, then I think you are looking at something like 23 or 22,500 levels. The corrections are not much at all. In fact, they hardly go up a little bit and then they get hammered again. Both the metals are extremely weak, and I wouldn't suggest any kind of buying at any point of time, at least for another 1 week or 10 days.
Vijay, from 1320 to 1430 kind of levels and a decline coming in yet again. What's your sense coming in now?
Manisha, gold is something I would still abstain, and I've been circumspect on the yellow metal since calendar 2013 dawned upon us. There's a clear reason for it. Initially, you had the overhang of regulatory intervention by way of higher duties and the government handing out disincentives for investors to be in gold. So I've clearly been more favoring silver as a relative investment avenue here. 41,500 is a level I have been talking about since the last couple of days, and I think I would still be keen to get into the physical investment market by deploying 10% more of the amount allocated for silver at 41,500 in the physical aspect, VAT and charges extra, of course. I think if that was to materialize, I would have deployed 40% of my investment in silver, earmarked for silver itself. And I'm still bracing up for potential declines even below the 40,000, for which some room for averaging is something that I would still maintain. I think over the next 24 to 30 months, silver will continue to outperform gold in terms of relative returns.
Fair point. Let's also get in then Guy Pe. He is Head of Metals and Mining Research, UBS, and joins us on the show as well. Also joining us to talk on gold would be Deep Mukherjee, who's India Ratings Director, Corporate Ratings. But let's start with Guy Pe first. And, what's your sense now coming in? The decline in gold prices has done a lot of damage to market sentiment. How do you see the prices for the current quarter now?
I think our view is that the gold price would consolidate around current levels. If you look at the price move in the last few days, you've seen that gold has come back quite nicely, driven, as we understand, by consumer buying and investor buying. So we're quite pleased that physical buying of gold has returned at these low prices.
Deep, let's get your view in as well going. What's your sense on the gold prices sell-off and its impact on the Indian jewellery industry that you have seen in the markets?
As far as the demand or the volumes are concerned, obviously we feel that initially there will be a knee-jerk positive customer response where there will be some incremental purchase of gold jewellery. Having said that, if the price keeps on falling, customers may be delaying the purchase in the hope that they may get a better bargain in future. That's one. Second point to note is that in last couple of years, when gold prices have been going up significantly, we have seen that the absolute there has been a growth in terms of price, but the volume has significantly fallen off.
Deep, your point is well taken. What kind of traders or jewelers do you think would get impacted the most with the kind of volatility that we have seen in gold prices in the recent few days?
Again, anyone who keeps the gold inventory in their balance sheet or in their books, it would be these type of players who would be directly impacted by the volatility. So you are very right. It is not just a sharp depreciation in gold price which would affect them. If the gold price keeps on moving for 2 months and then falls again, this volatility will also be quite negative for a lot of players. However, again, as we have clearly stated, a lot of the major players have taken this gold on lease from the banks. So the such jewelers, and often a lot of them are listed players, are unlikely to be impacted by the volatility. However, the banks which provide this facility may get adversely impacted.
Fair point. Guy, getting you back in the conversation, most people put the good slide to the Cyprus gold sales or the sentiment coming in from there on. How have you read the whole story of the gold prices sliding?
Well, I think it's not so much Cyprus specifically, but the fact that a central bank was considering liquidating some of its gold stock, and I think that created some doubt in terms of investors. And the gold price has been very solid over the fourth quarter, and therefore, we had this sort of correction.
Sure. How would you read the rest of 2013 now for the gold buyers and the prices as well?
Well, gold is one of our preferred commodities. We actually expect gold prices to stabilize around current levels and to start recovering throughout the rest of the year. So we are certainly bullish on gold.
Sure. Deep, getting you back in the conversation, what's your sense in the Indian markets now on the making charges strategy, as that is a formula that each jeweler has different. So with the prices being so volatile, how have you read the trend?
Well, we have seen in the past when the gold prices has risen very significantly, a lot of the jewelers were giving discounts on labor charges or were charging very low charges for the same. We would think that, with significant reduction in gold prices, they would again charge their normal labor costs, or whatever discounts they have been giving on their labor costs, they are likely to ease off, possibly benefiting their margin, assuming the revenue comes.
Sure. Gijas, where do you see the smart money now moving into in the near term? It's come out from most of the equity markets, at least in the emerging markets there. You also have seen commodities slide. Many of the emerging currencies also have taken a decline there. So where do you see the money flowing in now?
Well, I think right now at these prices for gold, we do expect some smart money to come into gold right now. And certainly the consumer and the physical buying would seem to indicate that. So we do expect the smart money right now to move back into gold.
All right. Deep, how do you see the gold industry in light of gold loans especially? The impact of gold prices decline has not been very kind to them.
No, that specifically is dealt by a different group, which is the banking group, and this is more a view on the corporate side, which is the gems and jewellery industry. But having said that, one expects from the published material of Indian ratings that it would be negative.
All right, so that's a view coming in from India Ratings and UBS on their prices, expectation on gold, and of course the impact of that in the Indian markets as well. But just coming back to some other non-agro commodities, and the base metal prices have seen sharper declines coming in yet again. Vijay, what's your sense now coming in? Nearly 2% down after 5% of declines coming in for copper.
Manisha, copper is in a state of flux, and I'm seeing some amount of pressure in other non-ferrous metals as well. Yesterday I spoke about some amount of semblance of support emerging at lower levels. I would stick with that view. that around 98, 99 aluminium is likely to see a whole lot of buying emerge from both bulls as well as bears who are covering their shorts. Nickel, I think, is close to the 808 to 810 levels. We'll see some amount of concerted buying. Lead and zinc also, I think, give it another 1.5%, max 2% decline from current levels. Should see some a bit of buying, and most of it, of course, can be bears who are booking their profits by covering their shorts, but it will lead to a tradable bounce, which a high risk profile trader might just want to exploit.
Shrikant, how would you be looking at the energy space? Because we started with the 1 week highs in the Asian markets, but after that it has been a decline, 0.5% down in Europe right now.
I don't know. I think as far as crude is concerned, I think you're going to see a lot more action on the downside. You may get a correction or two now, but I think it's presently trading somewhere around the 88.20 levels or so. 85 is a support, and then after that it's 82. Now whether it comes down to 82 or not is a question, but in the short term, I think there is nothing actually to really trade crude on the upside. So I would sell every time crude went up a little bit and book my profits on the downside, but I would also keep some positions open because I think you can make some money substantially on crude on the downside. So being bearish, yes, I think that's the only way that you can handle crude at this juncture, and I think it has got a lot of space on the downside.